Welcome to the channel guys, let's get in the video. Nvidia is still the heart of the AI revolution. Not just because it dominates the GPU market, but because it's expanding its influence across a fast-growing network of partners. Today, we are diving into Nvidia's position as demand for AI keeps exploding, plus the rising roles of companies like CoreWeave, Navitas Semiconductor, and Recursion Pharmaceuticals. We'll also break down why the infrastructure behind AI models is reaching a critical point, and what that means for the future of computing and investing. Let's kick things off with Nvidia. The stock has pulled back a bit recently, about 6% over the last month, but it's still way up for the year. We're talking almost 24% gains since January, and nearly 19% just in the last 3 months. That's not random. It reflects the massive, ongoing demand for AI chips. Demand that's still way ahead of supply. Recently, Sam Altman pointed out that OpenAI will have over 1 million GPUs running by the end of the year. He also said the next hurdle is scaling AI compute capacity by 100 times. Whether that's doable or not right now doesn't really matter. The big takeaway is that AI is still held back by compute power, and Nvidia is key to solving that bottleneck. Just look at how much usage AI models are getting. ChatGPT now processes around 2.5 billion prompts a day, about 330 million of those from the US alone. AI isn't just a buzzword anymore, it's part of daily life. And it's not just OpenAI pushing this. Other players like Elon Musk's xAI, Google's Gemini, and Perplexity are all building out their infrastructure. Most of them, they're using Nvidia's chips. That brings us to the big cloud giants. Their spending on AI infrastructure is something Nvidia investors should definitely be tracking. As these companies shift toward larger, more advanced AI models, it's not about if they'll need more GPUs, it's about how many, and how fast. Let's talk about CoreWeave. This is a private company that focuses on AI-specific cloud infrastructure, and it's become one of Nvidia's biggest customers. CoreWeave just announced plans to raise a big chunk of money, $1.5 billion, through a long-term debt offering. What's the reason? That's up for debate. One possibility is that they're expanding their infrastructure to keep up with demand. That would be a bullish signal. On the other hand, it could be a way to restructure existing debt. Either way, the scale of the move shows just how serious CoreWeave is about staying at the center of the AI race. Despite a recent dip in performance, the company has seen massive growth this year, over 200% since January. Next, let's look at Navitas Semiconductor. This company makes power components, and it's becoming a key player in solving one of AI's biggest upcoming problems, energy efficiency. Navitas stock recently surged by a huge margin in a single day, and that momentum continued after hours. What's fueling that rally? Part of it is growing attention from big institutional investors, which adds credibility. But the real story is what Navitas is doing behind the scenes. As AI models grow, so does their power consumption. Nvidia's current Hopper GPUs run at around 1000 watts each. The new Blackwell chips push that to 1200 watts. And the upcoming Rubin platform? That could hit 2500 watts per chip. To put that in perspective, full server racks are now using over 100,000 watts. That's 10 times what older systems were designed to handle. And in a few years, we could be looking at 1 million watts per rack. This isn't a gradual shift, it's a massive leap that requires a full redesign of how data centers are powered. Here's where Navitas comes in. They specialize in gallium nitride and silicon carbide power tech, two materials perfect for high-efficiency, high-voltage systems. Their tech plays a huge role in Nvidia's new 800-volt data center architecture. Traditional systems waste energy by stepping power down several times before it reaches the server. That leads to extra heat, lower efficiency, and higher operating costs. Navitas' solution? Let the power run directly from high-voltage grids to the server racks using solid-state transformers. This approach delivers over 90% efficiency, reduces current by 400 times, and cuts way down on heat. And they're not just working with Nvidia. Navitas also has deals with cloud providers and even collaborates with much larger competitors. That says a lot. In fact, their leadership believes that by 2027, over 60% of Navitas' revenue will come from data center applications. Last but not least, let's look at Recursion Pharmaceuticals. This company is using AI to speed up drug discovery. And Nvidia doesn't just partner with them, they also own part of the business. The stock's been a rollercoaster, down for the year, but recently up over 30% in just the past few weeks. There wasn't one big headline behind the bounce. It seems to be part of a wider move in speculative AI names. Still, Recursion did recently secure full rights to a promising experimental drug, which adds real value to their pipeline. It's a good example of how AI is starting to shake up industries far beyond just tech. Now let's be clear, CoreWeave, Navitas, and Recursion are all high-risk bets. They're not cash-rich, stable companies. They're volatile, early-stage players with big visions and lots of competition. But here's the thing, the areas they're working in, AI computing, power optimization, and AI-driven biotech, are going to be foundational for the next decade. If you're looking for opportunities in the AI supply chain, these are names worth watching. But as always, know the risks before jumping in.